Last class, we were doing the handout, the one you have in your hands. The companies between leasing and buying the equipment. And we did the leasing option last class. And leasing is simpler because there's no loan payment you have to calculate. So we calculate the present value of the lease option as $22,000 and change. So let's do the option to buy and do it in present value as well. So let's see. So this is the purchase option. Okay. We also have 5 years. It's a 5-year loan. So I'm going to copy this right here. Now, with the lease option, the payments happen at the beginning of the period, so that's why you see the numbers right here. With the loan, it's a regular loan, so the payments will happen at the end of the period. So, loan, beginning, balance, and you'll get to practice the amortization table. You have to do it so you can calculate the interest payment. For how much is the loan? If they choose to buy the equipment, it's in the handout. It's beginning of the second paragraph, $45,700. So that's how much the loan will. There's no down payment in this case, so $45,700, and that's an input cell. So I'm gonna color it like last class. So you can do that by you click on that Format Painter, click on this one, and it'll give you the same color. Now, we can't do the second year yet. We don't know what the balance will be. So we have to calculate the loan payment. So do that for me. Calculate the loan payment. It's a 5-year loan, annual payment. You have the beginning balance. You have the loan rate right here. So what is the loan payment equal to? Use the payment function. Follow the syntax and give me the loan payment, please. And it's going to be the same payment every year. So lock the cells you have to lock so you can copy the equation. And you have the same payment every year. Yeah. I'll just give you sorry. I can. Huh? That's what the payment is equal to, $10,849. And then if you lock the cells you have to lock, then it'll be the same payment every year, right? And don't forget, loans are monthly payments, but then if 5 years means 60 columns, so it wouldn't be efficient to show you that on the screen. So I'm keeping annual payments just to make it simple. Yep. When we did the amortization table, we calculated the payment, and then we calculated how much of that payment will be applied to interest and how much to principal. So do those calculations as well. The payment is $10,849. So calculate for me how much is going to be applied to interest and how much is going to be applied to principal. and you can help each other. And let me turn off this. So there you have loan payment, and then 2,742 will be applied to interest, and 8,107 will be applied to principal. If you're having trouble, I'll show you in a second, but it's normal to be having trouble. Eventually, when you're using Excel, like in this model at least, copying the equation, inputting in the equation, that's simple. It is what am I supposed to do so I can come up with an equation that I can input into Excel. Typically, that's where you start running into trouble when you're doing modeling. For that, you have to have a good understanding of loans, time value of money, at least in this case. So what is the loan payment equal to? I have the payment function, and then D5 will be the 6%, right? That's the rate. And then D6 is the number of payments in the loan. You have 5 of them, which are these cells up here. And then this right here is the loan principal, which is that number, and I put a negative so only to have a positive payment on the screen. And you can lock all of those because it's always the same payment every year. The payment is based on those numbers every payment of the loan. And then you can copy the equation and they'll give you the payment. Okay. Now, how much of the loan payment is going to be applied to interest? Well, when you give that first payment, does the company owe to the full amount of the loan? $45,700. So you'll be paying how much? It will be, what's the loan rate? 6%. So you have to pay 6% of that to the financing company. So what I'm doing here is E17, which is the loan, the balance, times the 6%. I didn't lock the beginning balance because that balance is going to start declining with each payment, but the 6% is going to be the same every payment, so I have that D5 lock. And then principal, how much is going to be applied to principal? Well, the loan payment is $10,849. $2,742 is applied to interest, so the difference will be applied to principal. Okay? It's what we did with the table for the home mortgage loan. Is everyone at that point right there? All right. So what will be the next step once you have all of this on the screen? You have to calculate what? The beginning balance, the second year, okay? And that will be equal to what? You have your beginning balance minus which number? No, the principal. Because only the principal of the payment is applied to the, so will be that. And now you can just copy the equations. All right, so you get those numbers. And how will you know if those numbers are correct? What can you look for to make sure that those numbers are correct? Look at the last payment, $8,849. What is the balance on the loan at that point? 10 to 35. And how much of the payment is going to be applied to principal? 10 to 35. So when you give that payment, some of that will be interest, the remaining will be principal, which happens to be exactly equal to the balance on the loan. So the numbers have to be right. If I copy this one more time, what's going to be the balance? Exactly 0, because you finished paying off your loan. Now, the reason why we're doing the decomposition, interest and principal, it is because if you read in the handout, interest expenses are tax-deductible expenses when you have a company. So we have to find out how much the company is paying in interest. Right? Now, before we do that, now, what else is a tax-deductible expense? It says right here, depreciation. Okay, so let's include that here. Okay. Now, how is the company going to depreciate the asset? What method are they using here? Straight line. How do you calculate the straight line depreciation expense? Like for this example, it will be equal to what? If it's a straight line, what does that mean? Same value every year. How do you calculate that value? You can't be that bad in accounting. That's the simplest one. Equals what? The cost of the equipment divided by what? The useful life, which in this case will be how many years? 5. Okay, so you can depreciate $9,140 every year. There are other ways to depreciate assets. This one is the simplest one. Now, lucky for you, if you forget how to do this, you shouldn't, but Excel has the following function. It's called, no, not SNL, that's the TV show. SLN. And SLN is for a straight line, and N is the number of years. So I'll put the parentheses, and what is Excel asking you for? Cost. So the cost is this one right here, okay? And it's going to be the same every year, so I'm going to lock that cell, the E17, comma, and then salvage will be what? Well, in this case, they don't tell you here they're going to sell the equipment, but if you sell the equipment, salvage value will be how much you sell the equipment for, but in this case, there's no indication of that. And then life is 5 years, so you click 5. And then Excel will calculate for you the same number that we estimated. And then we can copy that. So that's another command, you know, it's a new one. Straight line depreciation. So in the exam, if I ask you to do a straight line depreciation, you can use that command. Okay. Next, you're going to do the following. This is one big difference between accounting and finance. When you're doing accounting, you put all your numbers in the income statement, and then in finance, you take those numbers and you convert those into cash flows. You have to find the tax shield. How is that going to help the cash flow of the company? And that's what this is doing right here. What are the tax shields involved here? They're going to be equal to what can you deduct as a business expense? The interest payment, right? And what else? The depreciation. So that will be the tax shield in this example. Okay. Now, let me move so you can see that right here. If I do an income statement for the company, what are the main components of an income statement? Revenues, and then you do minus cost of goods sold, See, when that happens, because you put a minus sign, it's expecting an equation. So something you can do is you put an apostrophe, so you can treat it as a text. Okay? And that will be equal to what? EBIT, okay? And then minus the interest, that equals what? Taxable income, earnings before taxes. Yeah. And then you pay your taxes. Well, equals that. There's no minus signs there. So that equals minus taxes. And that will be equal to net income. Okay. So that's a very general format template for the income statement. Now, I forgot to include one here. I'm going to right-click on EBIT and click Insert, shift all the cells down, okay? And I'm going to include in there minus depreciation. Okay. And if you want, we can do this. Underline that one. That one. So it's minus. Something that can help you when you're doing Excel as well, and you're doing accounting statements, financial statements. When you have the bottom line, they do double underline. So if you click on the U with the underline, you can find the double underline. So it looks like a income statement. It's just cosmetics, but it helps. Now, as you can see on the screen, before the company pays taxes right here, what can the company do? They can deduct the depreciation expense and the interest expense. Okay? And that's why when you're doing the analysis for this buy versus lease, I'm calculating the value of the tax shields, because that's going to reduce the tax liability of the company. Now, you can deduce the whole amount. How much can you deduct? Only up to the tax rate of the company. So what I'm going to do here is modify the equation to look like this. Times the tax rate. And log the tax rate because it's going to be the same. Okay? So that's the after-tax tax shield. And then we can copy. Okay? And those are the numbers. Now we can calculate the after-tax cash flows, and they will be equal to, what is the cash outflow in this case? It's costing the company to buy the equipment, so it's equal to what? To the loan payment. But because you have those tax shields, I will do minus tax shields right there. So the cash flow you're going to be using for finding the present value is that number, the 6,096. So that's how much it's going to cost the company to purchase the equipment after you pay your taxes, and you can deduct the depreciation and the interest expense. Okay? So what is left to do here? I'm going to let you do this one alone. We have here the after-tax cash flows. We found the present value of the cash flows, and then we combine them. So do the same thing here. Find the present value of those, add them all up, and then you can find the present value of the cash flows. Now you can compare what is better for this company, the lease or the purchase option. Okay? And use the present value function, please. Well, if you have a better way. And let me show you what the numbers are equal to. That's the present value of each one of the cash flows, right there. And this is the present value of the whole option. Who's getting that number? 5,884. There's something you have to remember from last class, and it's easy to forget, so that's why maybe you're not getting that number. If you're not getting that number, you're forgetting this. D5 is what? Is the loan rate, but because the interest rate is tax deductible, you can calculate the after-tax cost of debt, so you multiply by what? RD times 1 minus the tax rate. And then copy the equation, find all the present values, and then you can. So what is better for this company, to lease the equipment or to purchase the equipment? We'll be leasing the equipment. Present value, $22,000. Buying the equipment is $29,000 in present value. This class is Excel in finance, but in a way it's like intermediate corporate finance. So you have your principles, intermediate, and then the advanced class. And that's something you have to keep in mind. When you're doing analysis on buying versus leasing, or you're doing the value of a whole company, always do the decision in present value. So that's what we're doing right here. Find present values. Now you can compare one option to the second one. Okay. When you're doing buy versus lease, keep in mind, you cannot multiply by 1 minus t, because you as an individual cannot deduct the the interest expense, but companies get to do that. So you can multiply, you have to multiply by 1 minus t. Okay. So don't forget that. It's important for modeling. So in this case, this option seems to be the better one. So I'll put it in green. Leasing. Now this is just one cycle of leasing. In the first option, what's going to happen? The company is going to have to lease the equipment again. And if the company buys the equipment, they own it. So there's no need to buy equipment again. If you start adding leasing cycles, you know, it's going to be that buying the equipment is a better option. Just like we did with individuals. Because when you buy the car, you keep it. The other way, you have to keep leasing. The difference between individuals and companies is, you know, technology moves very quickly nowadays. So if you buy the equipment, one disadvantage is that 5 years later, you have the old equipment. And when you're leasing, you get to lease new equipment, which is not only new and looks better, but it might have cost savings, like cheaper labor, and it's less people, energy savings. It uses less raw materials, so you can have significant savings when you lease equipment. Plus, when it breaks down, you don't have to fix it. You just call the company and they come and fix it. And it depends on the equipment. So that's why most companies lease equipment. All right. So let's do something so you can practice with this one right here. I want to replicate this. Let's say you're in the exam and I give you something like this, but it's a different number of years, so you have to modify this one. So let's do the following. Right click on list versus buy equipment, and then go to this option, move or copy. And you want to make a copy of the same one. So check this box, create a copy, click OK. And it's right here. It puts the copy at the beginning. You can always click and send that to the last one. So you have this in your files. You're doing the exam, and I tell you, I'll just modify something here. You will have number of payments 10. Okay. So you have to modify the lease and the purchase options so you can accommodate 10 payments. Give it a try. You already have template for 5 payments. Now you have to extend this to allow 10 payments. So it's going to be 10 loan payments, and it's going to be 10 lease payments. And let's assume the same numbers. The only difference is the number of years. So what do you have to modify? Everything is the same, just 10 payments, 10 years. I see many of you using the note touchpad for the exam. If you can bring a mouse, it's really going to help you so you can work more efficiently. If you want to use your personal computer during the exam, that's fine, because you're used to your computer. I'm going to turn off the screen and work on this. the mic is going on and off, so when you watch the video, you may not hear anything. I'll try to remove. I have to keep turning this on. Okay. For those of you who are working a little more slowly, let me give you some tips. Let me do right click again here, make a new copy. And you can do this later at home. Okay. So what I do is I'm going 10 years. So you can highlight those two, and when you copy, you'll populate those 10 years. It'll follow the same pattern. This right here goes in the last year, like that. So you can move that, yes. Yep, that's right. Yeah, so we have a mistake there. Thank you. So the last one is wrong. Okay. Now this will be right. If not, we have 11 payments. But so you move that, you can move that, and it's going to automatically update that in all of your equations. So you don't have to go and check. You can copy this. You can copy this right here. And then you can copy this. And then you come here, and you can expand this box. So you can include all of them in the sum, and it'll give you the right answer. So just by dragging cells and moving things and expanding boxes, you can quickly do the whole thing. Okay. Now that work, always double check. Here, make sure kind of double click on a few cells, the equations, make sure that it's doing what it's supposed to be doing. And if you don't see any mistakes, then you can go to the next one. Okay. So this one will be 10 payments, and then so now we do the same thing here. Now we do go all the way to year 10. The loan payment, it's working fine, the equation. It's based on 10 years here, so we can copy that one. Interest is working as well. It's balance times the rate, so you can copy it. Principal, it's working. Now the straight line formula, we have that 5 in there, so you have to change to 10, and then you copy the equation. Tax shields, we can copy that. I think now we can copy this like that, and then double click, expand the sum. And you finish. But you have to know how things are working so you can do this quickly. All right. So what will be better in this case? You still go with the lease option, right? It's cheaper. In fact, more than likely, I'll give you a better example in the exam, but the lease payment 4,100 will be smaller as well, because now you're leasing for. But no, it will be the same. Because it's like renewing, like having 2 leases, so it will be 4,100. So you still go with the lease option in this case, but it's not as clear as when you only do it for 5 years. Okay. So that's where you practice. When you study for this exam, students, well, what am I supposed to study? Open the models we've been doing in class and do 7 years, do 15 years. Move things around, make sure that things are working. Let's do a new exercise. Go to Finance Yahoo. You'll have to do this for the exam. And let me think of a company. We did Netflix. Let's do Walmart, and download historical data for Walmart. Let's do, and I'll give you the exact dates. Let me go historical data, time period. For now, let's do 5 years. I'm going to click here, 5 years. done. Let's use monthly data. So once you have that, you do that in the exam, download it into Excel and calculate for me, that will be the monthly return, and then calculate all the descriptive statistics. Kurtosis, mean, median, average. And this is model number 1. So if you help in the case, you're going to be using which one? The adjusted close, right? You will be doing descriptives in the exam and also the histogram. Labels. Should have something like that. Same numbers. If you click, well, I think when you do 5 years, it does include today. No, it's fine. Okay. How are you doing? Getting there? Will you guys work on this? What is the difference between using the descriptive command in Excel and using the actual, like the average command? Because you can calculate all of that one by one, So what is the difference between doing that and using the descriptives? This is quicker. In one click, you get all the statistics. But if you do one by one, what is the advantage of doing that? That if you change a number in the data, in the table, it's going to also update your average, skewness, standard deviation. Now, these are historical numbers, so they're not going to change. So you can do descriptive this way. But in other cases in which you're updating your table, numbers are changing, fluctuating, you can do this, but anytime you change a number, then you have to go and run this again. So sometimes it pays off to set it up so that it automatically updates all the time. Okay. So that's one thing. Anybody getting stuck? Okay. I'm using new minus old divided by the old one. You can also use the rate equation, but this is simpler in this case. It's just a percentage change. In the exam, I used to ask the students to print, the chart and the table, but sometimes it doesn't work. You can't communicate with the printer, so you're going to email me your file before you leave the classroom. When you finish the exam, you'll send me the name of the file with your name, so I can grade the exam from here as well. Okay, if you're done doing that, make a histogram with 10 beans. When I turn off the screen, it's still recording what I'm doing on the computer, so you can watch later and see again how this is done, or you can go and watch, the videos. When I was grading the model number 1, I have to, all of you, all the teams, you show a good understanding of the ratios. You know what they mean. And my guess is this is the first time you take a real company and you calculate all the ratios, and then you start doing analysis. This is what the company has been doing. This is what the company's liquidity is. So I hope you can see the value of being able to collect data, put it all in Excel, and then quickly generate all of these pivot tables. Historically, histograms, students forget how to do those. So if you are stuck, watch the screen. If you think you know how you can do them, just keep working on your own. So if I'm asking for 10 categories, you have to do the following. Make a column, and you begin with number 0, and you go to 10, like that. If I ask you 20, just go to 20. Okay? And then the bean categories. This one equals the minimum. So you always begin with the minimum, okay? Like that. And then for the next row, you do the previous one plus the range, which is the difference between the max and the minimum. And you have to divide it by the number of beans. Okay? So that way, all of the beans are the same size. And you're going to have this file when you are in the exam. But if I ask you for 20 beans or 15, I think it's easier just to start a new one than trying to change the other one. So you do that. Now, the range is always going to be the same. So let me lock that one. Double click. Okay. And how do you know if this is right or not? When you get to the last bean, that has to be equal to what? To the max. And you can see that they're exactly the same. So I have all my categories, my beans. And then what do you do next? You go to data analysis, click on histogram, okay? Input range will be all of the returns. Be careful not to include the last one. Okay? And then the bean range is the one we just created, right here. And then you want, you can output right here. And you want the chart. Click OK. And there it is, the histogram. And when I'm grading your exams, having the table it's the point. The histogram, it's another point. The beans are another point. So you get partial credit. But if you want the full credit, I have to see all of those elements. Will you say that Walmart monthly returns are normally distributed? Approximately, yes. You do see more points in the middle, fewer on the outliers. So it does have that bell shape. Is it symmetrical? It's 0.3. If it were symmetrical, it will be equal to 0. You do have a few more points on the right side than on the left. Kurtosis is 1.3, which means it's kind of flat. It has tails. But more or less it's symmetrical. Okay? What else can I ask you? Tell me, how many of those monthly returns are positive? How many are positive? what's the command? Count if, okay, range is this one right here, comma, and then when you input the condition, don't forget you have to use quotes, and the condition is greater than 0, and then you close the parentheses. So it will be 31 of those. And I want to give you a tip right here. If I ask you next in the exam how many are negative, then you have to do count if, less than. But if you do this, if you log the range like that, okay, and then if you copy that equation, what do you have to do to find the negative ones? All you do is change that to less than, and boom, you work quickly. How many are equal to 0? So you can also copy this equation and just change the condition to equals. And in this case, none of them are equal. What proportion are positive? Equals what? You count that over, and you already have the count right there in the table, descriptives. And I'm going to log the count, copy. So now you have 52% of the time positive, 48% of the time they're negative. Like 47? If you input the equation right, it can be. Yeah. Okay. Well, I mean, I do give you partial credit. I check, and if you're on the right. All right, so practice that. Now, for pivot tables, you will have to do pivot tables where you do financial ratios. But for that, I'm not going to be asking you to go to Mergent Online. I'll give you the data because that takes a long time to go get the data, clean all, empty all the columns and all of that. So just practice that. But if you go to Blackboard right now, we can practice pivot tables. But click on this one, the one that says pivot tables. That's the one with a huge database where you have those different people, countries, colors. And I'll give you the same database, that one you see right there on the screen, which you have, so you can practice. And tell me by individual, over the entire sample period, how many of each color each one of the individuals sold. Over the entire period, by individual, how many colors of each? How many of each color? Did I say that right? How many of each color? By color. So I think you have blue, yellow, black, red. So by individual, over the entire sample period, how many of each color? Do you guys have that? I mean, I don't know because I haven't done the table. But, okay. So if you're stock, you go to Insert, Pivot Table, click OK. And then what do you have to do first? You add the date, and then you don't have to, but it's always good to do this in case I ask you by quarter, by year. You click on Group field and select quarters and years. So now you have that. Right. Since it's over the entire period, we can get rid of quarters and order date. Actually, I'm going to add salesperson because I asked you guys by individual, how many of each. So then I'm going to add color, and I'll do this in column, and then add color to values. So that will be the table I'm looking for. Let me show you on the screen what I did. Since I don't need the date, it's over the entire sample period. I only have here salesperson, and then I click on color and put it here in columns, but it's going to give you just empty cells. If you want Excel to count how many, then you have to add colors to some values here as well. And then it'll give you that table. Yes. Yeah. So like that, you mean? Yeah. Just depends. Visually speaking, if you want to know by individual, you have to scroll down, and then it's kind of difficult to see, who's doing better by color. So if you put color in the column, you have a smaller table, and then you can compare Olivia to Miguel really easily in black. And the way you have it, it's kind of difficult. But, What if I ask you by year as well? So all you got to do here is add years. So you can actually see Andres. You can see the trend for black, for blue, for red. So just, add years. Like that. And if you click on order amount, you can actually see like Andres, 89 black, and the total amount for those 89 blacks, it will be that number. So like I told you when I covered pivot tables in this, you make your own questions. How many of this, how many of that, by this individual, by country, and just click until you get what you need. Yes. Oh, because you have to you need to have date, and then when you select the date, you click on group field and you select quarters and years, so you can group it into that. I'm going to stop today right here, so we can do more practice next Monday. Also, before next class, I'm going to post right here model number 2, which is going to be based on the mortgage loan tables. But I will explain to you, it will be due after the exam, so you can study it by Wednesday. But on Monday, along with the review, I'll tell you what the model 2 will consist of. So you can, after you take the exam, you can work on that and turn it in. So, but if you want to take a look at that before the end of, before next class, I'm going to post right here.